Coming up today, stocks finish higher. A preview of Nvidia's earnings. Small caps continue to fire up. Companies continue to pile into Ethereum. Trump fires a Fed governor. The Pentagon looks to make more investments. And what I'm up over 30,000 on today that I still think is early days. You're going to enjoy this one, guys. Let's go. And welcome back, everybody, on another busy day in markets. We've got a few things going on out there that I'm going to share with you as we head into the all-important day tomorrow when we hear from Nvidia and their latest earnings result. We're also going to get into Trump firing Fed Governor Lisa Cook and a few other things I think you'll find interesting. But first, let's just talk about one of the most dominating themes in the market today. After the big announcement from Nvidia yesterday, or what I thought was important anyway, even though I know not many other people are talking about this, was Nvidia releasing their Jetson Thor developer kit and production module, robotics computers designed for physical AI and robotics, now available to over 2 million developers using Nvidia's robotics stack, delivering multiples more in compute power and solving one of the most significant challenges in robotics, enabling robots to have real-time, intelligent interactions with people and the physical world. In fact, Nvidia went as far to say this little upgrade is a massive leap for robotics, releasing this just ahead of their earnings tomorrow, which I think we're going to hear more about. And that has once again lit up robotic stocks here today. Looking at the largest 25 robotic companies by market cap, ranked by their percentage gains today. Amazingly, the entire industry doesn't even have a market cap of 100 billion. The whole industry valuation is barely a large cap. And leading out in front is once again Richtech Robotics. And stick with me, because in a minute I'll show you my position of 40,000 shares in it to prove to you my conviction in it. And unlike others on here, prove to you I actually put my money where my mouth is and explain to you why I really like this company and think it has huge potential going forward, along with the entire robotics industry. And it wasn't just that news from Nvidia coming out with a new generation of a robotics computer that helped to light up Richtech. It was also the news yesterday they just signed another deal with a retail giant. We're still yet to find out which one it is. It could very well be an extension with Walmart, who they've already partnered with to operate restaurants inside of Walmart across America. Also coming off the back of a success of their own cafe brand, Coffee and Tea, which their signature AI-powered robot Adam is automatically serving up drinks in Las Vegas. And for those of you who don't know, here's a look at Richtech Robotics' website. And so they offer a number of different robots for different industries. Their signature one being Adam, that serves up drinks, cocktails, coffees, teas, whilst it can have a conversation with you, and the smaller one, Scorpion, mostly used in the hospitality space and especially for events. They've also got delivery robots, Maitre D, Titan, that are starting to be used in automotive workshops, Medbot in hospitals, and they've also got a couple of cleaning bots as well. And so that big news yesterday of Nvidia releasing a next generation developer stack for robotic companies just allows their robots to do more. And that's kind of what we really need to see, is real world application and companies actually using this and benefiting it. And so they've already got over 400 robots in existence. They recently went from selling their robots last year to a leasing model, calling it RAS, Robot as a Service. And they've seen some big names step up to partner with them. Mercedes-Benz, making Richtech's Titan robot the first and only robot ever included in their standard service equipment program. The Space Force also showcased the Adam robot at a recent event at the Kennedy Space Center. They're also expanding into China, and just early last month, they were actually added to the Russell 2000 Small Cap Index. And they also just teased out today potentially a new robot coming later in October at the Nvidia GDC event in Washington, DC. And so my regular viewers will know I've been mentioning Richtech all year, and I actually shared it with my options members back on the 23rd of June when it come and touched the 200-day moving average. I was buying the dip at $1.74, just like I told my members. And so in the interest of full disclosure here too as well, I'm still long 40,000 shares. Keep in mind, all of my content isn't financial advice, so please do your own research. I'm just sharing with you my research, trades, and analysis. And I know anybody can say anything online, so just to prove to you that I do have 40,000 shares. Here's my trade history for Richtech Robotics and Tiger Brokers, in which I've got 35,000 shares at an average price of $2.26. I actually started buying all the way back in early January this year. Sold a few shares for a small profit, and I've kept on buying the dip all the way throughout the year. And I've also got another 5,000 shares with another broker at an average cost of $1.88. So overall on this stock, I'm long 40,000 shares at an average cost of $2.21. And that was the 23rd of June when I alerted my members that I was buying the dip on it, and I was long 40,000 shares. And so of course this stock is very volatile. Expect it to have massive pullbacks and consolidations. But as I said, I'm in it for the long term because I believe there's huge potential. Still after today, it doesn't even have a market cap of $500 million. I believe it's a massive asymmetrical bet. Could easily reach a market cap of 10 billion in the next couple of years just on speculation, and even more so if we keep seeing fundamental growth in the business. I'm actually more excited about what's going on in the actual business than the stock price, because this is starting to make it onto retail traders' watch list today. Just having put in the largest dollar traded day since its inception, but still off its highs from earlier this year when it got up to 520. And so whilst most other FinTubers are out there trying to keep you scared out of the market by constantly showing you valuations for the S&P 500 index and other useless levels on the charts, we're out here making money. And like the old saying goes, make hay while the sun is shining, or you can keep following the perma bears and see how that works out, because it is a bull market after all, you know. And this is just one of many positions I hold. I am fortunate enough to manage my own 7-figure portfolio of liquid financial assets, and unlike other FinTubers, I actually put my money where my mouth is. Instead of trying to encourage you to gamble on day trading with overpriced courses that are proven to cause over 95% of retail traders to lose money. And so it's kind of mind-blowing to me. Some of the biggest FinTubers out there, hundreds of thousands of subscribers, and they're pushing absolute dog crap for their own benefit. So if you haven't already, smash that like and subscribe button to this channel, Click Capital, to let me know you like this type of content, and these videos will keep showing up in your feed each day, as I regularly share for free what stocks I'm actually invested in and when I'm buying the dip on this channel. Like I did with Tiger Brokers early last year, back when I was trading in the mid-3s, when I started buying it and regularly mentioning it on this channel, along with topping up my position back in late November last year after their really good earnings. The stock's up almost 4x since I first started buying, and I'm still holding. Still think it has a long way to go. And thanks to the other FinTubers out there that promote this broker. As a shareholder, I really appreciate it. And so I'm not saying all that to gloat, but rather to prove to you that I do actually put my money where my mouth is. I'm trading and investing just like you are, and I won't ever promote any crap that I wouldn't invest in myself. So I know I'm not the best video maker, but my goal is that you actually get more value from watching these videos than all the other crap out there. And just moving on to the big event this week, Nvidia's earnings after close tomorrow. Stock continuing to run up, just a few points underneath highs going into it. And so once again, the street will be looking for confirmation that the AI boom is still well and alive. We want to see a beat on the expectations of $1.01 in earnings per share, along with a top line beat, and more importantly, their guidance. I expect them to come through with beats, but one thing that's more hard to predict is the market's reaction, because companies can quite often blow out on numbers and the market can give a muted response, and sometimes you don't really see the real result until a week or two later. We can get what's known as that post-earnings drift. Market will also be looking for their commentary on sales to China. What do they forecast in revenue from that important market? And of course, robotics, as we're still very, very early days. It's less than 1% of revenue today for Nvidia. But like their CEO says, that is the future. That is the next big growth phase. And so as a big bull in this space, I'm happy to see what they're doing and announcing it just before their earnings as well. It's a great sign. And no doubt it'll be a big day in the options market as well. Pricing in about a move of 6% up or down, equivalent to 260 billion in market cap. And that could definitely have knock-on effects to the rest of the market and other robotic stocks. So I just want to make that clear. Don't be surprised to see a big pullback in Richtech Robotics. I'm not saying it's going to the moon right away. It is a highly speculative name. There's literally going to be millions of retail traders trading it, so it is going to move around a lot. Same with all these other robotic stocks, and Nvidia could very well provide the cue for the next move. In addition to small caps overall, we've been seeing good signs, technically speaking, in the market lately. Some improving breadth and a bit of a rotation since mega cap tech has really led this recovery from the April lows, significantly outperforming the market, helping to drive the main S&P and NASDAQ indices. But now small caps are really cheap relative to large cap, in addition to years of underperformance. And just looking at the spread of the Russell 2000 versus the S&P 500, we did a big push up there on Friday, and it actually looks to have taken out the highs of this multi-month base consolidation that's been forming for a little while here, something we've been looking for. And so this too could still be very early days on small caps outperforming, as the NASDAQ Qs look to have been consolidating for about a month now. And that move we got on Friday, like I noted on the daily market review that day, was a really forceful one, a big monster push, what they call a 90-90 day. More than 90% of stocks went up, and more than 90% of the overall volume was in up stocks, a big breadth thrust. And looking back over the last 45 years, whenever we've got those 90-90 days, the forward returns are super strong. Average 6-month gain of 16%, 12-month gain of 23%, more than double the long-term average. And I'd say even more bullish is Jim Cramer getting bearish, posting today there are too many cross currents, the market's too overbought, there's too much intervention, sit back and watch. We sure aren't buying anything unless it comes at a discount. And I agree with Wasteland Capital today on the point they made. The European Stock 600 Index, which is like the S&P 500 of Europe, has only had positive revenue growth in 2 of the last 9 quarters. And this quarter is on track to decline 1.5%. Yet we've seen a massive rotation this year out of American assets, the American dollar, into European assets, even though mega cap tech is still growing at healthy double digits. But the spread between American and European stocks looks to have already bottomed, and we're putting in higher highs and higher lows. So I think the American catch-up trade is already in effect, but it still has a while to go. We can see the spread here is not even above the 200-day moving average. As a lot of investors, big and small all around the world, are still hanging on to the theory that this US president is going to drive America off a cliff, and so they don't want to be invested in American stocks. But I agree with some of the richest men in the world, like Bill Ackman, David Tepper, and Ken Griffin. America has the most exceptional companies in the world, and one of them is Alphabet Google. With Ken saying today, Google is harnessing roughly the computational power of the 5th largest country in the world. If that's the scale of their AI foundation today, imagine where this company will be 5 years from now. Long Google. And this has really caught up the last couple of months, which is nice to see as it is a core position and has been for a long time. In my long-term portfolio, and as I shared with you guys earlier this year, I was buying the dip, adding to my long-term position, as I couldn't believe I could get Alphabet Google for a forward earnings multiple of 17, and it's still under 20 for next year earnings. Also shaping up on the chart here is Tesla, which just like the president, will always have an army of haters. They want to see it fail. They'd rather see Elon burn to the ground than achieve his ambitions. But the stock continues to creep up, and we could be on the verge of a breakout above this resistance zone, 367 a share. Just moving on to crypto, we saw a nice bounce back in Ethereum today, as these new Ethereum treasury companies continue to pile in as much as they can, buying more and more ETH, all trying to outdo each other. We even had Tom Lee come out today and call a bottom in ETH, as his company Bitmine continues to pile into it as well, at an unprecedented rate. In fact, his company's acquired almost 10 billion of ETH over the past 50 days, now holding over 1.7 million coins. That's 1.4% of the entire outstanding supply, and he's actually got a target to get to 5%. And just looking at the strategic ETH reserve, that now puts him out in front, more than double Sharplink, who were just the leader a few weeks back. Other notable holders listed on the market, the ETHA Machine, Coinbase, Bit Digital, and the newly created ETHZilla, for which Peter Thiel owns a 7.5% stake in as well. And they were actually out there today taunting bears with a message on X. ETHZilla is watching you. We also heard one of the president's sons investing double-digit million to the crypto prediction platform Polymarket, once again validating the huge growth of prediction markets. Polymarket coming back into the States to rival Kalshi, and Polymarket, like a lot of new digital platforms, runs on top of Ethereum. I deposited my Polymarket account using USD Coin, which runs on Ethereum, and is issued by Circle Internet Group, which I also just recently put on a bullish options position, looking to buy the dip here with my reversal signals indicator firing off. Did also see a little bounce in Bitcoin today, but still a bit weaker than Ethereum here, having lost its 50-day VWAP, along with some other crypto stocks as well, still having a bit of a pullback. Coinbase and some other newer ones to the market, like Bullish, still pulling back a little bit after recently IPOing. But the brokers still doing well, just like Tiger, Robinhood, also holding up pretty good. But just moving on to one of the biggest headlines dominating financial media this week. Trump firing Federal Reserve Governor Lisa Cook, citing mortgage fraud, for which she said she's going to challenge with a lawsuit. And just to be clear, she hasn't actually denied committing mortgage fraud. She's challenging Trump's ability to fire her for that. So she is guilty, with evidence from the Director of Federal Housing showing she did claim 2 of her homes as being a primary resident while she rented out one, getting more favorable loans and reducing tax liability. Of course, if you and I did that, we'd be going to jail, but she doesn't believe she should lose her job for it, and the mainstream media is framing it as Trump attacking the Fed. That's what they have an issue with. It's not a Federal Reserve governor actually breaking the law and committing mortgage fraud with hard evidence to back it up, but rather that Trump's trying to call her out on it. That's the problem, with many now saying that threatens the stability of the US dollar and the bond market. I mean, please, come on. That is a ridiculous claim. The fact is, it hasn't shaken market. If anything, it just means Trump can replace her with a more dovish Fed governor, help tip the balance, and we're much more likely to get lower rates sooner, which I would say is overall bullish for the market, because either way, we're going to get a really dovish Fed chairman if Jay Powell does stay through to May next year, and that can be ultra bullish for the markets. I don't think a lot of people realize how impactful interest rates and their direction are on markets, especially growth assets. And you could have likened today's setup to that of the mid-late 90s. It's a common misconception out there that the Fed only lowers rates in recessions, or we're about to get a recession. We actually had a soft landing scenario back in the mid-90s as well. What you're looking at here is a weekly chart of the NASDAQ index starting in 1995 over here, overlaid with the Fed funds rate here in the thick blue line. You can see the Fed actually cut in 95 and 96, stayed on hold before cutting again in 98 as there was signs of weakness in the jobs market. Does that remind you of a certain setup, kind of like what we're in now actually? And just like now, most people back then were screaming about a bubble and overvaluation. But there was still a lot of people that made a lot of money that were riding this wave because the Fed cut rates again in 98 and the NASDAQ index continued shooting up for another 2 years. And in fact, the Fed even started hiking rates in 99, and it wasn't until they finished hiking rates back in mid-2000, the market sniffed that out a few months early and peaked in March 2000, then rolled over. And of course, there was a very sizable bear market. And that's because the rate increases eventually bit. And so here we are now. The Fed's been on hold for a little while, but it's looking highly likely that rates are going to come down. Even if Jay Powell doesn't do it, the next guy will, and that could very well send us into another parabolic stage. And this time, the Nasdaq index actually has great earnings, unlike the late 90s. In addition to record retail participation, global liquidity on the rise, confluence of about a dozen secular trends, I think the ingredients are there for a continued melt-up. Bull market, rally, bubble, whatever you want to call it. Because if we keep seeing weakness in the jobs market, which we'll get a read on next Friday, first Friday of the month jobs report, the Fed will have no option but to cut rate, as that takes precedent over inflation worries. Remember, Jay Powell's just been speculating on inflation and what might happen. Even though tariffs have been in effect for 5 months now, in fact, the US government's on track to bring in over $330 billion this year in tariff, which is mostly on discretionary items being imported into the country, which you could kind of think of as a tax. If the US government is making its consumers, the mostly wealthy ones, pay a little extra, we're talking average 12% extra on a select group of imports, not energy. That extra tax they raise, they're putting back into the economy thanks to this little thing called the big beautiful bill. And so again, we have this near consensus that prices are about to shoot up. They're about to shoot up. We've been hearing this all year. It's going to come next month. It's going to come next month. It takes a while for the tariffs to come through. And for sure, we're seeing little bump ups on select categories. As supply chains get rejigged, the market adapts. But also something that's been, I would say, completely discounted is importers' ability to negotiate lower prices. Otherwise, they move supply chains. And we're already seeing that with a sharp fall off in one of the biggest categories coming into the state. That will be tariff. Cars from Japan. Their export prices have absolutely plunged as they work to still stay competitive. And this is why Trump put the squeeze on them, because America easily has the upper hand and leverage. So everybody will be eating the tariff. The exporters, the importers, the distributors, the retailers, and yes, maybe consumers on a select group of products. Is it going to cause a huge wave of structural inflation? I don't think so, because that comes from new currency. Because you think about yourself as a consumer, when you go shopping, say for food, different fruit, something's a little more expensive than usual, you either won't buy it or you buy less of it and you'll buy something else more cheap. And that encourages the market to recalibrate. Famous saying in commodities, the cure for high commodity prices is high commodity prices, because when something gets expensive, farmers grow more of it, then eventually tips the scales on the supply demand. And that's why you'll notice plenty of fruit and vegetables. They can quickly go from being expensive to cheap, back from cheap to expensive, because markets do a great job at adapting. And so if the Fed does start back up its easing cycle, that's good news for the market, because looking back in history, even on average, the market is up 10% 12 months later. Economic growth holds up, the returns climb to 15% a year later, and even in a big, bad, scary recession that we're constantly being warned about, the market only sees a drawdown of 11 or 12% 6 to 9 months later. The fact is, when interest rates come down, it's very supportive of the economy and market. Just like when interest rates go up, it puts a lot of pressure on markets. But the difference this time is the Fed did its sharpest rate hiking cycle ever from 22 into 24, and it didn't topple the economy or the markets. The yield curve has been wrong for 3 years now. In fact, I think you could say this time it didn't work in signaling a recession, and that's because the AI boom has overwhelmed it. But one could make an argument that this secular bull market started in March 2009 after the S&P bottomed, or in mid-2013 when it broke out to new all-time highs after the US stock market went sideways. For 12 years prior to that, it was kind of already well and truly on fire in 2019. It was actually accelerating to the upside. Then we got the events of early 2020, which only gave us a bear market for a month and a half. Managed to oust the president, but then he's come back in and I'd say lit things up even more than his first term. This time getting more directly involved in market. We just heard that again today. The Pentagon, after recently taking a stake in rare earth miner MP Materials, is also looking at other defense contractors like Lockheed Martin. Some speculating about Palantir as well. And I don't know how much more bullish you can get than the government directly investing in these stocks, getting right behind them to make them successful as possible. And that no doubt helped with the outperformance of the aerospace and defense sector today, with the ETF ITA up 2.3%, close to breaking out to all-time highs here. And it doesn't stop there. Big story over the last week has been that of a favorite American restaurant chain, Cracker Barrel, which for over 50 years had this logo. Then they got a new woke CEO, which then just came out with this new logo, which caused a huge amount of backlash. And Trump posting today that they should go back to their old logo and admit they made a mistake, and even posting his own version of the logo. Go woke, go broke. America is back, because the reality is most people are sick of all that woke crap, the silent majority. With even other restaurant chains like Steak and Shake jumping on board, saying the woke Cracker Barrel management has even less competence than your predecessor. And it's just hit the wires as I speak that they've scrapped their new logo and are reverting back to their traditional logo with an older gentleman sitting next to a barrel. And once again, that's exactly what the market wants to hear. Ripping up over 6% after hours on the back of this news. And just looking at the regular session, looks like somebody knew that was coming, as it was already trading up going into the close. Once again, consumers and the market speak. It's management's job to listen, which it appears they have done this time. And just to look at what else is moving out there, one of the hottest stocks of late, Newegg. Just like I said last week, it's bound to have a massive correction, and it has done over the last week. Stock price actually getting cut in half, as it had gotten super volatile. But just looking at Open Door Technologies, the other retail favorite, that could still have further to go. Doesn't look like a massive blow off top yet. Still got a huge amount of short interest, and retail traders are just so powerful as a crowd these days. There's really no telling how far it can go. And thanks to one of my viewers yesterday for mentioning the new ETF, Global Humanoid and Embodied Intelligence Index, under ticker symbol KOID, to me yesterday. A new and small ETF, pretty interesting, given exposure to companies involved in humanoids, but with most of the fund being invested in Asian companies, 53%, and quite well diversified, only having a quarter of the fund in the top 10 and a few Chinese stocks. A lot of people don't realize how big China is on robotics, really going to give America a run for its money, and that's kind of what motivates the American government and all these other companies to stay out in front and innovate. Kind of think about it, you got OpenAI's ChatGPT that kind of kicked off this whole trend, really challenging the tech establishment. You got Google with Gemini, who have been criticized over the last couple of years for being behind, and so they're very motivated to prove themselves. Elon Musk, pissed off that he helped to create OpenAI, financed them, then was shoved aside. Now he really wants to catch up and overtake them with XAI and Grok. Then you got Mark Zuckerberg with Meta AI, also wanting to prove himself and not be left out of the AI race, spending huge to secure AI talent. And you've got other startups like Perplexity, Claude, and a few others, all throwing their hat in the ring. They're all competing against each other, trying to outdo each other. Who has the best model? The end result, like all competition, is more innovation and a better product for consumers. And then they're all as a group competing against the Chinese as well. And an ETF that focuses more on American companies in this space is the Roundhill Generative AI and Technology ETF, ticker symbol CHAT. It's had a monster recovery from April lows. And of course, we'll learn more about this tomorrow night. Make sure you come back to Click Capital. I'll break down all of Nvidia's latest numbers, their guidance, and of course the market's reaction in the post-trading session. In addition to looking out for comments regarding robotics, my area of special interest, as it was great to see a monster rip in Richtech Robotics today, along with Tesla pushing up to recent highs as well. Could see a big move in markets tomorrow going into Thursday open. Then we'll get GDP numbers on Thursday and PCE inflation numbers on Friday. Options market not penciling in much volatility over the next week at all. Got the VIX 9-day at 12.9. And the S&P 500 on the cusp of breaking out to all-time highs and hitting 6,500 for the first time ever, as there's clearly been a bit of a growth rotation. Defensive still a little weak, and oil, bond yields, and volatility all downtrending. Pretty bullish setup. But of course, Nvidia, GDP, and PCE numbers could move things around. So we'll see what we get. We'll see how the market reacts. And as always, I'll break it all down for you. I hope you enjoyed this video. Click that like and subscribe button if you haven't already, and I'll keep sharing my ideas with you. And hopefully we can all make a lot of money. Cheers.